Hi everyone, this is Paul Lang from DTS, and I want to introduce you to what you're about to watch. It's an hour-long event that was presented live to the free members at Disciplined Trading Strategies. It is called A Deeper Look at Popular Trading Wisdom, and I'm going to discuss several popular cliches, sayings, some people think actual educational comments that are made about trading. I've grouped them into three categories. You'll see these as you begin to watch this event, and I'll give you a hint. One of these categories are sayings that are absolutely wrong that a lot of traders actually listen to. If you enjoy this event, check out the many other full videos and educational events, articles, and Trade of the Week videos you can get access to at the DTS Free Stuff page. But for now, sit back and enjoy this event. Good afternoon, everybody. Welcome to today's event. Are we good on sound? Hello, hello. All right. Sounds like we are good. As I first had the idea for this event, I kind of really liked it. As I got the list together, I said, this may be a little boring. As I got all the details together, I really kind of like it. So I think it'll be a good event. All right, everybody's tired out from St. Patrick's Day. This is called A Deeper Look into Popular Trading Wisdom. A couple of quick comments about kind of why I got onto this topic. Actually, it's from a while ago. It's been brewing in my head. You hear me talk about these from time to time. I discuss them because they're critical for education. Even in the seminar program, I talk about them in free events here and there scattered around. I kind of pulled them all together, and I think the inspiration was somebody who sent me a picture of a chat that they went to, a free chat room. I guess there's free trading chat rooms out there. I've never sat in one. And somebody brought up the question about, whether or not they should pay to watch some video or get some education or something, whatever it was. And the person wrote back, "No, that's stupid. You don't need any kind of training to make money in the market. All you do is just follow the trend. That's all you have to do." Wow, what a great comment. I want you to know who this is coming from. This is coming from somebody who sits in a chat room with 300 free members, and they all say to each other, what do you think about Microsoft today? Gee, I don't know. What do you think about Microsoft today? I mean, anybody who sits in a room with 300 free members and asks them questions about what to trade, do I need to say anything more? But it just, kind of amazes me still how so many things that are said in trading. In any other environment, nobody would believe them or go for it. But in trading, for some reason, everybody just kind of gloms onto some of these things. So let's get going with what some of these are. Deeper look into popular trading wisdom. And I guess trading wisdom maybe should be in air quotes. I'm not sure. I'm not going to read that slide. You saw that in your email if you want to look it over. Here's exactly what we're going to talk about tonight. Three categories of topics. These are common expressions, sayings, or things that you hear when you come to trading. And by the way, when you first come to trading, if you decide, hey, I'm going to go look at being a trader, long-term investor, day trader, whatever it is, and you start cruising the internet, you're going to run into a handful of common cliches very quickly. And over time, you're probably going to find 20 or 30 of those common cliches. And you're going to find out that very, 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 very few of them are worthwhile. Matter of fact, I only know of two that I still consider to be worthwhile in terms of, maybe adding any kind of value to anything. But here's the categories to me. The saying or the statement is true, but totally insufficient to act on. Okay, so it doesn't hurt you, but who cares? True, but mostly just cliches, kind of similar to the first one, but it's not even an actionable event. It's just something to say. And then the third one is just downright wrong. There's things that people say that are just wrong. I'm not talking about necessarily specific chart topics, which you can find a lot of wrong on, but just things that people say as sayings that aren't even really true or can actually hurt you quite a bit. And some of those, unfortunately, are the popular ones. The purpose of this presentation, especially if you are newer to trading, to open your mind to what matters. That's a big one in trading. What matters when you're trying to make money by buying and selling stocks, Forex, futures, whatever you're doing. To show how powerful technical analysis is when you understand it. I keep saying technical analysis is just amazing. Few people really understand how good it is. And the main reason for that is because few people have ever been trained properly on how to use it and how to look at it. I see people trying to analyze charts and/or people who are disbelievers and show me examples of how it doesn't work. And it's hysterical when I get examples of how something doesn't work. They just come and they show me a chart where excuse me, but only an idiot would think that that was a long in that area, and they said, well, I played this off support and it didn't work. Well, why is that support? Who told you that's support? I don't even understand how anybody would think that's support. My dog would know that's not support. I mentioned my dog trading the other day. To eliminate misconceptions and meaningless phrases that will never lead to making money. They can be harmful, they can be dangerous. And actually, the second and last slide, I'm going to talk a little bit about how it's not necessarily good to constantly accumulate information if you don't understand the value of every little nugget that you're learning. I'll get into that more later. So here's the first list, and I'm not going to pull up a slide for every one of these because there's like 30 sayings. I'm going to have a few slides that go into detail on some of these, and then I'm just going to give some lip service to some of these because they're not things that really need to be discussed a whole lot. So here's a quick list of true but totally insufficient to act on. And there's some overlap here in the categories. You know, it just depends how you want to grade them. Cut losses quickly, manage your risk, trade with discipline, wait for confirmation, be patient, trade with the trend, have a trading plan, exit when the trend changes. It almost sounds like a handbook somebody would give out on the internet to say, here's all you do to trade, right? That's it. Cut your losses quickly, manage your risk, trade with discipline, wait for confirmation, be patient, trade with the trend, have a trading plan, exit when the trend changes. If that's what you go on, if that is your total playbook, how are you going to do in the market, anybody? And this would be somebody who's probably been around the block more than a couple of months. Yeah, a total month. There's nothing on that list that's wrong, right? There's nothing on the list that you'd say, oh, that's a stupid comment. But it's just insufficient, like the title of this section is. It's just things that you say that people tend to just bypass. They tend to just say, okay, I'll be patient, and they go trade. Well, how do you define being patient? What does patient mean? All of these are correct ideas, but they provide zero actionable guidance. Two traders can follow the same advice and get opposite results. Cut losses quickly sounds good, but what does that actually really mean? Cut losses quickly. Here's the first slide on something. Cut losses, see a little check mark over here? That means we're talking about it a little bit. Cut losses quickly. When? As soon as it turns red? When do you cut losses quickly? Let's say that's your goal, and that's one of your things that you put as a headline in whatever plan you have, or that's your actionable thing when you're trading. I'm going to cut losses quickly. Now, somebody listening may say, hey, that sounds like a good idea, because if you don't ever lose much, then you're probably going to be a winner at the end of the day, at the end of the week, at the end of the month. How do you cut losses quickly? Does anybody have an action plan for that? When exactly do you decide to cut a loss? As soon as it's a loss? So as soon as if you get in a trade and it turns red, you cut it immediately? And does that imply that you didn't have a predefined risk? In other words, if I take a trade, I spend, let's say as a day trade, I spend some part of the evening the night before scanning. I find something I like the next morning. I check and market correlation and whether it's gapping or not gapping or wherever it's opening. Check the relative strength and weakness. Check all these things and decide, here it is, perfect timing. I'm going to enter this thing. And I decide to allocate a certain amount of dollar risk where I will then get out of the trade. I get in the trade, and when it is gone 1/10 of the way the wrong way, I'm going to exit. Does that make sense to anybody that you would get in a trade and assume or presume that it's only going to go directly in your favor? I don't care if you're scalping as a day trader. I don't care if you're taking a long-term position off a weekly chart. It's all relative. If you're going for a 10-cent profit as a scalper, well, does that mean that you can't tolerate it backing up 2 cents? If you allowed it to back up 10 cents, if you gave your stop loss 10 cents, why do you get out at 2 cents? Why, as a weekly chart trader, if you gave something $5 as a stop, why do you get out after $1? Yeah, well, you know what? Things will a small amount. I mean, I don't know how you ever do a trade where it always immediately goes in your direction. There's always a range in there where you're trying to get in. My question to anybody then is, well, what changed from your plan? In other words, how is it even defined in your plan that you cut losses quickly? I know this all sounds good. And here's the big deal. That's a common cornerstone of everything I always teach. And some of the people that are here, you'll know this. What is the key question to determine if this is correct at all and to what extent? I'm going to pause on that for a minute. Cut losses quickly. Good idea or bad idea? Well, The right answer is, well, you can't just say generically, but how would you answer that for you? Exactly, VRL, perfect, right. Whether or not cutting losses quickly makes sense for you is a matter of tracking to see. When you've cut losses quickly, did that save you money or cost you money? Now, some of you, if you're newer, may be saying, well, how could it possibly cost you money if you got out quick and cut your losses? Well, because if you get in something here, and your stop is here, and your target is here, and you get in and it does this, and you get out and you cut your losses quickly, well, that's a good move if it always does that, right? But it's a terrible move if it does that. And if you're going to give me the answer that you get out and get back in, don't even talk to me, because that's just a mathematical fallacy. That's a ridiculous answer. That is always going to lose you more money doing that. So it's a matter of understanding if that's the proper thing. Now, I will say this, that the worse of a trader you are, the more this will make sense for you, right? Because if you generally lose, this will help you lose slower, and you'll die of 1,000 paper cuts. And that's what some people actually, not intentionally, but unintentionally strive for, to lose slowly. Not the plan for me. If you are a reasonably good trader and you get in a situation where you start getting hyperactive and you start doing this too much, this will cost you tremendously. But the question is, do you know? Does anybody listening to me even know the answer to that question? If I were to say to you, you don't have to know the exact number, if I were to say to you the last 15 times that you changed your stop to cut a loss, did that make you money or lose you money? Does anybody know the answer to that question? 10, 15, 20, 50 times? Does anybody know in general? If you don't know the answer to that question, you should not be trading with real money. What's going on tonight? I'm going to blame it on St. Patrick's Day. All right, next one. Manage your risk, trade with discipline. These are just, give it some lip service topics. I mean, there's nothing wrong. Managing your risk is actually something that is, almost okay to not put on this list, because that is something you can pretty easily do. Simply saying managing a risk isn't obviously anything good. It's insufficient. I mean, it's insufficient. It's not that it's not good. It's insufficient. But it's pretty easy to put meat around managing your risk, right, in terms of share size and starting off with the risk amount, et cetera, maximum position. So you can do that fairly easily. Trade with discipline. Well, what does that even mean? It's a common thing you hear all the time. You have to learn to trade with discipline. This is called discipline trading strategies. But what does it mean if that's your total game plan, is trade with discipline? What is the definition of trading without discipline in your mind? What do you have to do to be trading with discipline? Let's go to the next. I think the next one is wait for confirmation, right? Wait for confirmation. All right, so here we get into a little meatier topic here. Waiting for confirmation. Is that a good thing to do, everybody? Great answer. It depends. But if you're waiting for confirmation, is it defined for you? What is confirmation? And where is the line between waiting for confirmation and being grossly late on your entry? Are late entries good? Are late entries okay? Well, late by definition, I'd have to say no, that's not good. There are entries that require maybe confirmation that are later than other entries, but late being just late for no reason is bad. The entry is everything, and a late entry compounds its way all the way down the chart, because now your profit at a certain target is much less. It may make you not take profit there. It may turn winning trades into losing trades. All kinds of things follow from that. So the earliest possible entry is always what we want, but earliest possible is a big definition, right? Sometimes we want a lot of confirmation, sometimes we don't, and the amount of confirmation we want is inversely proportional to the amount that we love the trade. Can you define confirmation? VRL, how many types of confirmation are taught in the seminar program? It starts with the letter I, or it's also a sideways 8. I mean, right, we go through a whole section where there are lots and lots of different types of confirmation that you can have, but you know what it is. Yeah, and there's, I mean, theoretically, it's almost an infinite amount, and as a good trader, you have to match that to what you're doing. But just the general, the reason I'm going into kind of this quick, fast-paced detail is just trying to get across. I'm not trying, like the opening slide said, like the opening slide said, I'm not trying to teach every second of this. I'm trying to simply show you the level you have to be at to make money in the market. It's not a difficult level, but just saying I'm waiting for confirmation, and then you say to the person, well, what is your confirmation? Well, I don't know. See when other people jump in. That's not confirmation. And the opposite of that, if you're waiting for confirmation, is shouldn't a good trader often, anybody know how to fill that in? That's a very tough one to fill in. Even I would have struggled with that if I didn't write it. Shouldn't a good trader often do what? Just, well, yeah, but in terms of the entry, waiting for confirmation, shouldn't a good trader oftentimes just know, not need confirmation, in other words, right? Shouldn't a good trader know, I have arrived, bam, right? I don't need no stinking confirmation, right? Right, and the rules, of course, Thomas, your rules should encompass different chart patterns, where sometimes, I want confirmation, sometimes, I don't. Here's a chart example. It's not a bad example for this, but it's from today. And I always like doing things from the last day or two, so you know I'm not going back in history to pull out some unique slide. What kind of confirmation was that? I shorted that right there. What kind of confirmation was that? It's a 2-minute chart, if you can't read it. That's upstart. Yeah, but what kind of confirmation is that? Are we talking about what you have to wait for confirmation? What did I wait for? I didn't wait for anything. I decided as a skilled trader, I knew that was the high of the day, and I shorted it. If I had any confirmation, it was extremely minute confirmation. So you can see how the simplest comment can get a little convoluted. Waiting for confirmation, not something that you always even necessarily do. And as some of you know, I teach different entries, and one of the entries would be like this. This is a trade from today. And there is no better trade you can have than to short the high of the day. I've done prior presentations where I start off with the question about, because a lot of trading philosophy would say, never try to short the high of the day. Well, that's a pure idiot teaching you that. How do you make money if you don't short the high of the day? Well, you can, obviously, there's other ways. But how can you argue against the fact that shorting the high of the day is not the greatest thing you could ever do? Buying the low of the day is the greatest thing you could ever do. And yes, it's very attainable on some charts. Not every chart, but you find the charts that it's attainable. So I shorted 10 cents off the high of the day. There's the numbers for it, and it fell cover half on the free fall, coming into the low of the day, trailed the other half a little bit above it. Trade done in 90 minutes or something like that. That was from today, right? Somebody in the room, that was from today. And I just threw it in there because it's a perfect example of, hey, wait for confirmation? I don't know. The next 3 things are just lip service. Be patient. Isn't being patient the same as waiting for confirmation when you're supposed to? I think it is pretty much. What enables you to be patient? Anybody have that word? What enables you to be patient? What enables you to sit there and the stock you want to go long starts moving up and you've decided it's not in the right area and you pass the trade? Exactly, Gary. Thank you. Confidence. Confidence. To sit there and say that I'm going to wait for it to come down another level, and if it does not come down another level, I will just miss this trade. I will take something else. Trade with the trend. We're going to do some trade with the trend things here in just a minute. Trade with the trend is on this list in 2 different forms and 2 different names. It's all over the place. So trade with the trend we'll get to shortly. It's under a different name, I guess. So that'll be coming up. Position sizing. Sure. I mean, okay, that's a great one. And that's like the other one I talked about, managing your risk. I mean, it's the same thing pretty much. That one, you know, just saying it doesn't mean anything, but that one is fairly easy for you to define. It's just math. Have a trading plan. Personality, not part of my personality, fighting all the time. Yeah, well, it's can't get into it more right now, but yeah, it is for a lot of people, Carmen. Ready for this one? Trading plan. My trading plan. Here's an excerpt from a trading plan. Give me your thoughts. I'm going to buy quality setups that are in proper pullback areas, perfectly trending 5-minute charts, and only enter upon strong confirmation. Scale of 1 to 10. 10, that's a nice trading plan. 5, it's so-so, and 0, it stinks. Where would you put that? Yeah, even a 1 is too high. This is just a joke I put on the screen, but what's funny is, I'm not kidding with you, most of the trading plans I get are very similar to that. One of the goals of a trading plan, I explain trading plans in 4 or 5 different ways, and one of the goals of a trading plan is to, unfortunately VRL already ruined my answer, but it's to eliminate one of the words in the English language, and that's adjectives. The purpose of your plan is to decide what is a quality setup and define it in as objective terms as you can. What is the proper pullback area? What is a perfectly trending chart? What is strong confirmation? This is a completely worthless mockery of a trading plan, yet, no joke, this is what I see most of the time. Look at what you have written down. And I know out of the group listening to me, some of you are probably, this is better than the average group because a lot of you know are seminar students. But if you're a non-seminar student, I bet you that there is a 90% chance that you don't have any kind of a usable trading plan. And by usable, I mean, yeah, maybe you wrote something months ago and it's somewhere on a computer, but it's not something that you rely on a day-to-day basis. It's not something you follow up and check on. And if you're not doing that, you're not serious about trading, which, that's up to you if you want to be. But this is the typical trading plan things that I have. So again, popular trading wisdom, have a trading plan, so what? So you have a trading plan. I've told you before, I've received, well, this is like halfway through DTS, I had received 300 trading plans over the time I was looking at trading plans. Two of them, I sat back to the few I thought they were okay. 298 were worthless. They're not hard to do. People are just lazy. They try doing them without understanding what they're even doing first. Again, we are on the topic, popular sayings, learning how to trade, but are just completely insufficient to act on. The details of having a trading plan, well, again, seminar students, I have an hour-long video about it. I'm not trying to make it overly complicated, but if you want to make it an effective tool, if you want to make a trading plan an effective tool for your trading, there's certain things it has to do or it is worthless. Any comments, any rebuttals? Exit when the trend changes. Is that a good idea? Let's say you're in an uptrend and here's part of your plan. I'm going to exit when the trend changes. Good idea or bad? What do you think? You can put G or B. Well, let's assume that you have taken a trade on a particular chart because of that particular trend, and that particular trend gets broken. Maybe gets broken is a better word there. You're on a weekly chart. You're in a weekly chart uptrend. You went long, and the weekly chart uptrend just broke this morning. It broke because it went below that prior pivot low, which is probably your stop. Good idea? Again, it depends a lot on your skill and knowledge, but let me ask this follow-up question, which will maybe clarify it or why I think that's a bad idea. Like, as you know, VRL, in the seminar program, I specifically teach not to do that, right? Could be the worst thing you ever do, right? After an uptrend ends, everybody, what is the next most likely trend to develop? Yeah, but a pullback is not breaking the trend, Carmen. I'm talking about on the main chart you're on. So if you're moving up like this is your uptrend, right? And yes, on a pullback, I mean the small time frame, yes, we know that. But I'm saying what happens when this happens? After an uptrend breaks, the most statistically most likely trend to go into next is to go back into the uptrend, like Dan said. Absolutely 100%. Yeah. Trends are hard to break, and a lot of times they hiccup a little bit. So when you exit here, it should be the spot you were entering. I'm not saying that's a great setup there. I'm just saying that usually, and again, you have to kind of, it depends. A lot of these things I'm saying depend on your own personal trading. What charts you're trading, what kind of uptrend you're in, what kind of pullback it was, what time frame you're on. All these things can matter, but generally speaking, when an uptrend ends, it goes back in an uptrend. When a downtrend ends, it goes right back in a downtrend. Stuff happens. Trading is not perfect. It's not like you're drawing art on a board somewhere. It's people who go crazy, buy and sell, it overshoots, whatever happens. So you have to look at the reaction to the trend breaking or being challenged. All right, that's the end of the first category. True, but totally insufficient evidence to act on. Good stuff so far? We okay? I'm moving on. I don't care if you like it or not. It's my presentation. Not sure. True, but mostly just cliches. Let your winners run. The trend is your friend. The market is always right. Price discounts everything. Buy low, sell high. Don't fight the tape. Trade what you see, not what you think. There was another comment somebody had in that chat the guy sent me, which was all you have to do is buy low and sell high. It's so easy, right? Trading is so easy. These phrases sound wise. They are repeated so often they become like folklore. And these are the ones you hear when you start, right? You're reading just little dumb books about trading and little cliches and listen to videos. But most traders never define what they actually mean. Let winners run, but almost nobody defines when a winner should actually be exited. That was hard to say. When a winner should actually be exited. So sure, it's easy in hindsight to go back and say, boy, you didn't let that winner run. But in the moment, do you know how to do that? How do you do that? Let's take the simplest thing here. Here is an expression, one of the very few expressions you hear when you start trading, that actually is correct and does permeate trading. It doesn't explain exactly what a trend is, but it is something that turns out to be one of the truisms of trading, that trends tend to live on. They're your friend. They should be one of the ways you make money. I've always said, there's a whole presentation I did, that there's 2 times you have an edge in trading. One is when you follow a trend, and one is when that trend abruptly ends, called shock value. Those are the 2 times you have an edge. So trends are great. By the way, the other saying I like a lot is buy the rumor, sell the news. As cliche as that sounds, and again, it doesn't have any meat on it to actually know how to do it, but the concept very much lives on in trading. That's why sometimes a great earnings report is your opportunity to short a stock, not to go long. So what is a good trend if it is to be your friend? Good trend, comments, I'm talking about this area, right? Good trend, give me some comments. I'm not going to talk till I see 5 comments out there. Yeah, this is an aftermath. Now, obviously, you may say, yeah, gee, it's a good trend because I see it's going up, so I'm not going to say it's a bad trend. But just because it's going up doesn't mean it's a good trend. It doesn't mean, in other words, would you jump in here? Would you jump in here? Are there any negatives to it at all? Yeah, this is a weekly chart. Well, I see a huge negative. No, forget it. Well, actually, a topping tail is not bearish, Gary. I think you have heard me talk about that. A topping tail is not bearish necessarily at all. I'm surprised everybody, well, I guess it's because you're all seeing it going up, so nobody wants to say. What I thought somebody would say, somebody would be critical and say that this is very accelerated. Here's your little 20-period moving average, and we're kind of accelerated. That's really, you know, shooting higher. That's what I thought somebody would say. And if somebody were to say that, that was my point, which was going to be this, is that if that's the weekly chart, I love that trend, but it's really hard to trade on the weekly chart. In other words, whatever concepts you're using, whatever strategy, whatever entry criteria, it's hard to find that chart. But what do you do when you see a chart like that, which is borderline what I call power trend? In other words, it's so tight that you're not really seeing actionable pullbacks or consolidations. What do you do when you see that? Yeah, exactly, Carmen, exactly. There's the weekly chart. Here's the daily chart. And the daily chart looks like that. I didn't draw any lines on it. You don't need lines. But there's the daily chart that developed inside of that weekly chart. So, you know, understanding what time frame to look at, what good trends are, it's not always all that simple. By the way, when we get to the point, get a dictation thing. When you get to a point that the daily chart says I've had enough. Now, trends don't go forever, right? They're going to end sometime. Sometimes they end without a lot of warning, right? Sometimes we don't see it. Remember, not every chart movement is predictable and actionable. Stuff happens more than it doesn't. That's why I say the market is a random walk. But there's a lot of times we can see and prevent it. And we'll get to that in a second. But how about when that happens, what do? There's the daily chart. The trend finally broke, right? Right in here somewhere. Look like we're doing good right in here. And then there's a signal, okay, right where we should be going higher, a big red bar comes in. That means people are now selling for profit instead of buying this anymore. That sets up this. Well, what do we do now? Well, what happens is when this daily chart breaks, we jump back and we look at that higher time frame, and we see that it landed in a possibly a buyable area, not anything great. But it's very important to understand that how the time frames interweave, and understand that if you decided at some point to short this when the uptrend broke, you're playing a very limited window of opportunity because you're shorting from there to there on the weekly chart, and that's where you would expect it to get a bounce. Why I might, all the stuff I'm saying, what justifies it? Well, that's a deep understanding of charts. Again, I'm not here to teach all this because that takes hours and hours. But I'm here just to show you what you can glean from charts. That was the goal tonight. Let's go to, what are we on next? Is this trend likely to continue? Yay or nay? That's just a yes or no. I pulled the moving averages off of there because this stock had gapped down, and it makes them look grotesquely far away, but that shouldn't influence your decision because it was a gap down. Is this, well, just based on this. I know you always want more info. Like you probably want to see the chart 2 days later, right? Then you can tell for sure. At least one more bar. Yeah, this is what I call a power trend. Again, this is what I kind of alluded before in the Apple chart, and this is Ulta. This recently had gapped down. This is a chart that is so tight. I made this a 10-minute chart. I can make it a 10-minute chart. There's no reason not to. It's so tight and precise, it's hard to even find entries, right? And exactly, it continues until it doesn't. Good boy, you remember that from me talking, Carmen. It continues to it doesn't. It goes another whole day, and then once it breaks, that's it. You're done with it. It's no longer going to continue. This is a chart that nobody's taking profits. We just keep going. I mean, obviously, there's a buyer and seller every trade all the way down. I get that. When I say nobody's taking profits, I mean the relationship, the ratio between buyers and sellers is such that the sellers just keep pressure on. Nobody ever gets the need to, big sellers, mass amounts of people never feel the need to get out. And at the end of this day, we accelerate lower, right? See the big volume come in. We're puking out the end of the sellers. That's not going to go lower again. You do not look to short that again. But during that period of time, power trends are great. By the way, I did not trade that. I was just something on the screen that day. I was doing something else. I did see it on the screen. That was just a few days ago. That was the 16th, 3 days ago, Ulta. Same question. This trend continuing, yay or nay? This is not a power trend. This is just an uptrend. This trend continuing, yay or nay? VRL says a big yay, absolutely, positively. What about the rest of you? Continuing? Come on. Boy, there's like 3 of you typing. All right, we got a tie here. We got a yes, we got don't like it, we got a VRL is actually a no, but what does he know? Anyone else voting on this? You try it? Okay. In all, oh man, yeah, I'm sorry. But on this one I didn't want you guys to vote. I didn't want you guys to vote, my bad. Now I'll have to temper my comments. You've actually seen this one before. That's right, Carmen. The question is, would that trend continue? You've seen this before because I put it in a presentation maybe 6 months ago or something as a test question. And I actually borrowed this slide from the seminar program because this is one of those finer teaching points. And this is such a tremendous no that I often bring charts like this to the day trading room and look to short them. That's how strong of a no this is. This is an absolute no. And the difference between looking at this chart like you're just looking at a TV screen or looking like an old Western movie and actually analyzing what's going on is huge in this case. And this stock, you could bet anything in the world that that's going to break down before it ever tests that prior high. And I know it's easy to look back at a chart, but I bring these to the room all the time. I've seen other examples. They are hard to short because it's hard to get an entry. But you have to know that this is a dead stock as far as the trend goes. I just want you to notice when I start showing you some stuff, you'll catch on, right? There is a normal trend, but we rally, people take profits. We rally, people take profits. We rally, and people take profits. We rally, and people take, oh, wait a minute, nobody took profits. As a matter of fact, after moving up that much, we power trend. But then people take profit. Oh, no, they still don't take profits. Then we accelerate. Do you see what's going on, everybody, if you didn't catch it at first? Everybody is long. Nobody took profits. What happens when you hit a high and then you drop to here? That's one of the big psychological demons. It's my biggest demon is I want to get out at the high. And when I miss it, I kind of want to wait for that next attempt to get to the high. The problem is when this thing bounced, everybody, through here it's normal. Everything from here and above is all a lot of people need to take profits. And the first bounce you get, this is what's going to happen. You need to recognize that. Now, even if you don't have the intestinal fortitude to short that, you have to understand that that is never a long at that point, right? Breaking the moving average is not a relevant comment to me, Cal, sorry. It has nothing to do with it. You mean right here? Breaking the moving average is not at all relevant. Charts break moving averages all the time. I'll go long. It's not. The moving average is just a mythical line we draw on a chart that has no relevance to actual support or resistance. The reaction to moving average maybe, but yeah. But it's the pattern. It's the chart pattern. It's the price action that you have to follow to understand what's going on with it. So let's move on. Another example is you see this, and this is the same example as Apple. Really, it's just another a different time period. It's another market type stuff, but this is just Cisco. You see a move up like that, starting that tight chart. I don't care if it's a tight hourly chart, come down to the 5-minute, a tight weekly chart, come down to the daily chart, and you can see very, very tradable moves in there. Those are the type of moves that you want to see. Very, very tradable stuff. These are the trends that I like. These are the trends that are more predictable. Here's a type of trend that a lot of traders like because they see bigger moves. I do not like this at all. These are death traps because you just don't have any real good concept of where they're going to hold. Yeah, they have some bigger moves, but they're wild, they're whippy, they're much more difficult to trade. It doesn't do any good to get a bigger move if you don't know, and this is just after the fact, after here, right? It doesn't do any good to have a stock that has a bigger move if it takes you 3 times to get it right and your stop is proportionally bigger as your target. You understand what I'm saying, everybody? In other words, if I made up numbers, it's too hard to do on that. But the wild stocks often draw people to them because they say, look at the move it could have, but they're not making more money doing that. Precision is where it's at. Precise concepts, precise entries, things like in here and in here and in here, where that move could represent a 7-8 hour move. Some talking points. The market is always right. Okay, again, that's kind of like saying I could trade great if I could go back and trade today's chart at the end of the day. I mean, of course the market's always right. How does that help you? I guess it's maybe helpful to some degree from a psychological point of view to try and get traders to stop wishing their will upon the market. I think it is useful in that psychological sense. Like I just said, that people read things and they say, oh boy, the economy sounds bad, and oh, there's a war going on, and blah, blah, blah. But prices are going up. And they just keep saying, well, to them, yeah, guess what? The market is always right. You can have all the justification you want. One of my favorite sayings has always been that in any bull market, if you have a debate between the bulls and the bears, if you have a smart bullish person, a smart bearish person, the bearish person will win the argument. They have all the facts on their case why the market should be dropping. They have all the evidence. They have all the numbers. They're 100% right on everything except for one thing. They're losing money because the market's going up. Who knows why, but they're just wrong. Price discounts everything. This is absolutely true, and it's more than a cliche, I guess. It's actually just the absolute truth, but the problem is nobody ever embraces that. I hear people say that, okay, price discounts everything. Oh, but there's a war going on. Well, wait a minute. Price discounts everything. Oh, yeah, I know, but the inflation's going up. But price discounts everything. You can't talk out of both sides of your mouth. The market understands everything that's going on. It's aware of it. And again, the only time that is not true, when price doesn't discount everything, is when there's shock value, when there's something that is not in the scope of everything. There's something that is just, and again, to the market, I've said this before, in my trading career, there's only been 2 times where there's been shock value news to the market, not to a stock, but to the market. And that was 9/11 and COVID. That's it. A CAPE ratio, I don't even know what that is. Does that have something to do with Batman and Robin? Buy low, sell high, the classic, right? If only you knew how to do that. Don't fight the tape. What were my comments for don't fight the tape? Isn't don't fight the tape, does that mean follow the trend? I mean, trade what you see, not what you think. I don't think I'm going to comment on that. Don't fight the tape. Isn't that what I did on this trade? I just put it back in here again. I was too lazy to get other trades. Isn't that what I did on this? I fought the tape. What does fight the tape mean? Well, I think, again, I'm not an old timer in the market and never been on Wall Street, but I think the tape just means in the old days where there weren't charts necessary, there's just the prices going by on the screen, like your time in sales, right? That's the tape. Just watching prices go by. So if prices are going up, don't fight the tape. Well, that's exactly what I do all the time, every day. I fight the tape. Why? Because I guess the question is, you know, if the tape is the time in sales, and that gets printed out to make a chart. So I'm following the tape, if you will, from a different time frame, from a higher time frame, a higher. So the reason this trade worked, again, I'm not here teaching this trade today, but if you go look at an hourly chart, you see why I shorted it there, because it came into an area, 10 o'clock reversal time, biggest bar in the chart in the uptrend, going into 60-minute major resistance. I do this trade every single day, but yet I would be accused by some expert traders of fighting the tape and trying to short the high of the day, which is impossible to do. Those are all people that have a whole tool belt full of cliches, but no real trading experience. Any questions so far? We're going to move on to number 3. And number 3 is kind of short because it's just a lot of things that are totally wrong, and it's hard for me to justify the wisdom in them when they're totally wrong. Any comments, questions before I move on? Still don't know what a CAPE ratio is. Just downright wrong. These ideas are not just incomplete, they're harmful. They push traders toward prediction instead of process. I like those words. They create false expectations about trading. You have to predict the market. News drives the market. Indicators tell you what the market is. Let me go to the next slide because I already X'd off some of these. You've heard me talk ad nauseum unless you're brand new. And if you're brand new, just go look at some of the prior educational events or podcasts I've done. News drives the market. Indicators tell you what to do. If you're right 50% of the time, you make money. Losing trade means those are just topics that I've beaten to death, I feel, so I'm not even going to cover those. They're just totally wrong sayings. There's no truth to them whatsoever, period. Cyclically adjusted price earnings. Oh, okay. So in other words, Cal, that's when some fundamental person wants to buy a stock because they just like it, so they make up numbers to justify what they want to do, right? I don't care about the source, that's right, yeah. So yes, it has an ADP ratio, but it won't be 80 once XYZ happens. It'll be back down to 20, so I'm going to buy it now, yeah. So it's just confirmation bias. It's just making up whatever you want to justify what you're doing. It's justification. You have to predict the market. A good trader always knows where the market is going. Is that true? Is the market about prediction? Is it about always knowing where the market is going? And boy, if somebody spit out 3 magic words right now, I'd be so impressed. All about what I do. Reacting, I don't know if reacting to, I don't like the word reacting to what's happening because it always has you lagging behind. I don't like the word reacting. I mean, yes, I understand it in a sense. I'm not going to say it's wrong. I just don't like that word because in the perfect storm against you, reacting to what's happening means that you'll be on the wrong side of the equation continuously. Let me give you an example. You have kind of a wide base in the market or whatever stock you're doing, right? So you don't know what to do. So you react to whatever happens. Okay, I'm long. Whoops. Okay, now I'm short. Okay, now I'm long again. Oh, now I'm short again. You know, that's reacting, right? Rather than understanding where this whole price pattern is in the chart and understanding I would only go long down here or whatever the situation is, or that I'd leave it alone. The words I were looking for are one of my favorite words in trading, a moment in time. It's not about necessarily knowing exactly what's going to happen and predicting it. It's understanding that there are areas, there are moments There are times where, okay, if it's going to happen, it's going to happen here. And I'm talking about aside from any, huge, a shock value news event. Funny we talk about it because we're just having one of those moments now. As far as I'm concerned, in the market for 2 years, I've been bullish for the most part. Well, it depends, but for the last 4 months, we've been sideways. And, I've seen a lot of information. It's not the case anymore. So I felt this has been a moment in time. It's not about prediction, but it's also not about reacting. It's about taking the necessary steps while you're in that moment. And if you're right, you do well. And if you're wrong, you get out with minimal loss. The problem with reacting is you have big losses when you're wrong. So it's understanding and being there and recognizing those moments. And that just comes from understanding charts. It's really all that it is. Questions on that? Reacting within your plan, trading plan, or position management? Well, yeah, but you're just kicking the can down the road. It's just kind of like when I say, should you take this trade or not, and you're saying, well, it depends what's in your plan. So what should be in your plan to stop you from reacting the wrong way? And I'm using the word in quotes because I kind of get what you mean, but taken literally, I don't like the word reacting at all. So again, you can say, yeah, react based on what's in your plan. Great, but what's in your plan now? That's the next question. What's in your plan? Any questions? Well, one is a stopwatch and one is a clock. Wow. Whew. Wow, boy. Whew. Too many Oh, I tried to come up with a fancy beer name real quick, and I couldn't do it real quick. That's true. You don't see a stopwatch anymore. Yeah. Hey, it's a diagram showing a moment in time. Okay. All right. Two topics left. This is a big one to me. I'm going to take a while on this one. I'm going to take 8 of the last 10 minutes on this. More information leads to better trades. What do you think about that? Is that true or false? More information leads to better trades. More information leads to better trades. You can qualify this answer. It doesn't have to be true or false. More information leads to better trades. Yeah, well, those are some good answers. Yeah. Well, obviously, it has to be true to some extent, right? I mean, if you're starting at 0, you have to have some information to make a decision, right? But once you're at a certain level, then the question is, does more information continue to help you? Let me explain why it can be not just a waste of time, but it can be detrimental. Right. Yeah, true. So that's what I meant, Roger, is it is true to an extent. You have to look at sufficient information. But beyond that, looking to more information does not necessarily give you better trades. Let me give you an example in real life, and let me give you an example of someone I know who does what I do, teaches education, that has it wrong, so to speak. Yeah, that's kind of it, Cal, to some degree. What I was going to, well, let me do the diagram first. It's this. Here's 12 pieces of information, right? 12? So there's 12 pieces of information. So you say, okay, I'm going to analyze all this information. Now, if you analyze it all equally, you'll come out with a certain decision, right? You look at all this information, you come out with, here's my answer. It's 7.2. I'm just making up stuff. But there's your answer, right? But what if the truth of it was that out of those 12 pieces of information, that 6 of them carried 95% of the weight. And these other 6 were only 5% of the relevant decision. Do you see where I'm going with this? But if you don't know that, and you evaluate them all equally, you're going to be heavily swayed by what these 6 say when they are really statistically irrelevant. A football scout goes to the high schools looking for the next great quarterback or whatever, right? And because he has to look at hundreds of students, he decides that he's going to get a tracking sheet and just make this as objective as possible. So he takes, every quarterback, he puts them through the certain number of tests. How fast can you run a 40-yard dash? How far can you throw a football in general? They have some, moving object you have to do with a football. How do you score on that? What's his overall health for longevity purposes, blah, blah, and there's some 5th thing, right? So there's his 5 criteria. Well, he brings an assistant along the next time, and the assistant is some guy right out of college and says, oh, no, I want to get more detail. So he takes it from 5 to 20 pieces of information. And now he's including what grade the potential quarterback got in his history class. If he was inoculated for measles, you know what I mean? He goes through these other 15 things that are like, okay, maybe all 15 of those together make a 1% of a difference, but now if you take an average all these equally, you've clouded the mix. There is a particular firm out there, and I'm aware of, that kind of copied my GAP program, and to sell it, they said, hey, instead of having these 5 criteria, I'm going to have X criteria. They put out like 5 times the criteria, which as a selling point makes it more accurate because we're looking at 25 things. But the additional 20 things that were included were irrelevant things. They're just like all 20 together didn't make 2% of difference. So you're spending your time looking at all this stuff and swaying your decision that way, where really what you have to learn is, what are the key things that matter to this trade? What is the 90% level that matters to this trade? Let me phrase it another way that it just popped into my head, is that something I have to be careful of is that I'm a bit of a perfectionist at times. What's terrible about perfectionist? Anybody? Maybe some of you border on that. You know, I'll get to your questions there. Well, it's never good enough, but that's a psychological problem. No, you take action. No, that's not really it. You eventually take action. Yeah, they're annoying. That's true as hell. The problem is time, everybody. It's time. In other words, to get the last 10% correct, it takes 90% of the time. You follow? You do 90% of the job in X amount of time, you're done. You should be done. And then putting the last little tweaks and stuff. Now, you know, some things in life need those last little tweaks, but I just mean when you're just, you know, tightening the corners on stuff that doesn't need tightening, that last 10% takes 90% of the time. That's the problem. It's kind of the same issue here, except it's even worse, because it's not just time, it's watering down what you're doing. Now, what you have to decide then, of course, is what are these 6 stars? Good, Paul. Pick black on black. That works really well. What are these 6 stars in trading? That, of course, is what you have to know and understand, right? Technical analysis, the proper time frames, entry concepts, all the things are taught. That's what matters, right? And then these things down here are going to be things that simply don't matter or matter to some extremely small degree. What doesn't matter at all? What the news was, what the technical indicator says, what the analyst says. This is the type of garbage that if you try and factor this in, it's a huge negative to do that. Thank you for the great point. Right, Cal. I mean, trading is not an exact science. There is some variability. Absolutely. That's the whole issue. If trading were an exact science, it wouldn't be trading. It would be engineering or architecture or something else. And finally, you know, my last one that has always been one of my pet peeves, a very, very, very popular saying that I'm putting in the dead wrong category. Now I have to qualify it because technically it's correct. If you never took a loss, I guess you'd be making money. So let me say that. I'm not an idiot, I understand math. But this is a saying to constantly use this as an excuse to take small profits is the problem. This is just the #1 saying for so many traders. Now, I'm not saying you have to go for big targets. I'm not saying you have to go for big profits. All I'm saying is that there's a certain formula, if you will, between, you know, of expectancy, between your risk reward and your batting average, and you have to maintain that. And so many traders, for psychological reasons, always kind of chicken out and want to grab the quick profit because it feels good. And the typical trader I see that's failing, has a 60% batting average. I want to make that point clear. Do you guys all get that? I'm not talking about seminar people. I mean, I talk to more people that are not seminar than seminar people. And they come to me and like, I don't know what's wrong. You know, I get most of my trades right. But it's the same old thing. Either as a new trader, sometimes they have okay winners and then they have huge losers. Or as an experienced trader, they learn not to take huge losers, but then all of their winners are small. The reason they're not taking huge losers is because they're constantly taking very small profits. And It's just this break-even forever scenario that they get into. So I'm not trying to push a trading style at all. Understand that. I'm not saying, as a matter of fact, those in the summer program, no, I don't teach any reward to risk as being mandatory at all. Right, VRL? You still out there? There's no risk to reward I push whatsoever. Well, all I'm saying is that you can't constantly need to hit 50 cents on the average trade, whatever it is, to make money, and then just chicken out at 20 because it's a winner. Because you'll just be, at best, in that break-even mode for the rest of your career. And it's hard to snap out of that. It is. Not at break-even, there's a transaction cost. I'm not sure what that means. Well, break-even is a term that I vehemently hate because break-even has no point in your language. Other than if coincidentally, if by some weird concept in the universe, you happen to get out of a trade right around where you got into it, and it turns out to be break-even in hindsight, it's break-even. But the concept of trying for a break-even trade is just a fatal one. What is the relevance of break-even, anybody? And I'm not saying, I'm not against minimizing losses. I'm not against raising a stop on a long position when it's appropriate. But what is the real consequence? What is the real motivation for break-even? Mental comfort, exactly. It's mental comfort. Your break-even is never on a chart. Do you realize that? Your break-even is virtually never on a chart. It can be. I mean, it can eventually become. But the odds are, if you're buying some kind of pullback, I don't care what your strategy is, how you trade, whatever it is, when you decide to get in, wherever that is, that's not any relevant spot on the chart other than in your head. If you're taking some kind of breakout, right, you get in, boom, that's not a spot to get out. I mean, it just is not a chart relevant thing. Now, it could coincidentally develop to be. I mean, you could get in, and then you just happen to bounce off this 2-3 times. Okay, that's going to be my stop. And, oh, it happened to be break even, that's fine. But the goal of break even, again, it's not based in anything that you should be using. And what I implore you to do, again, even if you're not a seminar student of mine, is to just check and see how that's doing for you. Again, the more that you are a losing trader, the more you will benefit from over-management and break-even stops. But all you're doing is slowing the losing process. Keep that in mind, everybody. When you apply some of these things I say, if you find out you do worse doing what I'm telling you, if it's because your management concepts are only slowing your losing process, you're hopeless anyhow. It doesn't matter. And a lot of people find that if they take reasonable trades, that the proper management puts them into phenomenally successful traders rather than break even all the time. Tomorrow is the summary edition of the Introduction to Mastering Technical Analysis class. So it's going to be 2 hours, 4:30, is that right? That's not the right times. You'll get an email tonight about it. Who put that on that slide? I got to fire some people around here. I don't know where that came from. It is tomorrow, though. It is tomorrow. I think it's going to be 5 to 7, right? I don't want to start early because nobody will be here. Nobody will understand why we're doing this. It's 5 to 7. I don't know what that is. So tomorrow's the intro class, 5 to 7. If you've only been to one once, please come again. Make sure you're here for it. It's free to all members. And naturally, this comes before Super Saturday, which is a one-day quick hit of all the seminar classes in one day for the seminar students only. Tomorrow is free. Saturday is a paid-for event for seminar students. It's on Thursday. Yeah, this is the summary edition, Roger. I've always done it on Thursday. The full edition where we have a full class on Saturday, I do it on Friday for 4 hours. But I've always done, since I started the Super Saturday thing, I've always done the intro Thursday evening. Yeah, so it is tomorrow. You'll get emails about it tonight. Yeah, you may have them coming out now. I don't know. All right? So we'll see you for that tomorrow. It's always a pain for me. I hate going through this stuff quickly, which I have to do in the summary edition. But it's fun. All right? Any questions, anybody? Feel free. Don't have to go anywhere. But otherwise, I'm done with tonight. I hope you enjoyed it. And that's the next free event is tomorrow. We'll see you tomorrow. And then I think we're together next Monday is probably scanning night. So we'll be seeing you 3 out of 5 nights here. All right? Sounds like we're good. Have a great night, everybody.